What's up, everybody? It's your boy Sat coming to you with today's stock pick, indicator help, and investment tips. Remember, this channel is all about no face, just facts in 5. I do the research so you don't have to. Today we're talking about a stock that with one of the biggest promotions in the entire market. Marvell Technology, ticker MRVL, was officially announced as a new member of the S&P 500. And if you're wondering why Wall Street is paying attention, buckle up because this story is bigger than you think. First, let's talk about what happened. Marvell shares took a hit recently, dropping over 11%. On the surface, that sounds scary, but when we dig into the facts, the sell-off wasn't because Marvell suddenly became a bad company. It was a combination of profit-taking, concerns about future AI spending, and fears about interest rates staying higher longer. Still, the stock has doubled since May. Now, here's where things get interesting. Despite the pullback, Marvell was announced as a new addition to the S&P 500, replacing another company in the index. That matters because every S&P 500 index fund, ETF, pension fund, and institutional investor that tracks the index now has to own Marvell. We're talking about billions of dollars that flow into S&P 500 funds. When a company joins the index, it often receives increased visibility, increased liquidity, and increased institutional ownership. Think about it like getting promoted from the minor leagues to the major leagues. You were already talented before, but now everybody knows your name. More analysts cover you, more institutions buy you, more investors discover you. That's exactly what happens when a stock joins the S&P 500. Let's talk about the technicals. Looking at the chart, Marvell experienced a sharp sell-off followed by a powerful bounce. The RSI has recovered from oversold levels and currently sits in neutral territory around the low 50s. That's important because it suggests the stock isn't overheated anymore after its recent correction. Meanwhile, the MACD is beginning to turn positive, showing early signs that momentum may be shifting back toward the bulls. The Bollinger Bands tell an interesting story too. The stock fell hard enough to test the lower band before snapping back aggressively. Historically, those kinds of moves often signal exhaustion from sellers and the beginning of a stabilization phase. Does that guarantee higher prices? Absolutely not. But it does suggest that buyers are stepping back into the stock. Now let's address the elephant in the room, AI. Marvell is one of the key players benefiting from the artificial intelligence boom. Their custom chips, networking infrastructure, and data center solutions help power the AI revolution happening right now. The recent weakness wasn't because AI disappeared. It was because another semiconductor company, Broadcom, gave investors a more cautious outlook on long-term AI demand growth. The market reacted by selling first and asking questions later. But here's the reality. AI data centers aren't being built for one quarter. They're being built for years. Every major technology company is racing to increase computing power. Every cloud provider is investing billions. Every AI model requires more bandwidth, more networking, and more infrastructure. Those are areas where Marvell already has a seat at the table. Now, I want to be fair here. There are risks. Interest rates remain elevated. AI spending could slow if the economy weakens. Competition in semiconductors is fierce, and after a huge run-up earlier this year, volatility should absolutely be expected. This is not a risk-free investment. But if you're a long-term investor, today's question isn't whether Marvell moves up or down tomorrow. The question is whether you believe AI infrastructure will be larger 5 years from now than it is today. If the answer is yes, then companies building the backbone of that infrastructure deserve serious attention. One thing I've learned over the years is that the market often overreacts in both directions. When stocks are soaring, people think they'll never stop going up. When stocks are falling, people think they'll never recover. The truth is usually somewhere in the middle. Great businesses experience pullbacks. Great businesses experience corrections. And sometimes those corrections create opportunities. My takeaway? Marvell's inclusion in the S&P 500 is a major milestone. The recent sell-off appears driven more by sentiment and sector-wide concerns than by a collapse in the company's business. Technically, the stock is showing signs of stabilization. Fundamentally, it remains tied to some of the biggest trends in technology, including AI, cloud computing, and data center growth. For investors willing to accept volatility, this is definitely a stock worth keeping on the watch list. Remember, I'm not a financial advisor, and this is not financial advice. Do your own research, manage your own risk, and never invest what you can't lose. Don't forget to smash that like button, subscribe, and drop a comment with your favorite stock below. We are officially on the road to our next milestone, and I appreciate every single one of you for being part of this journey. As always, this is Sat with Stocks by Sat 06. No face, just facts, in 5. Peace.